A to Z on insurance coverage. And with that said, we're going to go ahead and dive right in here. So again, welcome everybody. Like I said, my name is Kristen Tabar. Here's just a little bit of background on me. I always like to have a visual and be able to put a face to a name. So this is me and my little family. That's Justin and Cassandra, 2.5 and 6 months. And my hubby right there in the middle. So I like to show these pictures as just a get to know me a little bit, and I'm a property owner myself. So this is why my husband and I are investing, to help us prepare for the future for these little cute little faces. So just a little bit about me, moving right along here. Let's do a little sound check. You guys can let me know that you can hear me. Also, you have a panel where you can ask questions live throughout the presentation, and we will do our best to answer those, not only as we move through, but if we have time at the end, we'll go ahead and get some of those questions answered as well. In addition, the next slide is a little bit about me, so I want to make sure that you guys can all hear. Just kidding. I can't see your reaction, so I'm going to assume that when I say things that I think are funny, you guys are all laughing. Like I mentioned, I'm an advisor here at Marshall Reddick Real Estate, also a local California realtor. I won't read off of this slide because I assume that all of you folks that have joined us tonight can read, but I am a real estate investor myself. Like I mentioned, my husband and I own 5 properties across 4 states. All markets where Marshall Reddick Real Estate has teams, property managers, agents, a whole team of individuals that help our clients with their purchases. I've been with the company for 2 years. A fun story that I'm happy to share later, but my husband and the VP actually went to high school together. So we actually began investing with Marshall Reddick Real Estate before I joined the team as an employee. So it's really nice for me to be able to practice what I preach and help all of my clients to be able to attain the same success that I have. So a little bit about me, moving right along to a little bit about Marshall Reddick Real Estate. So we're a real estate brokerage, full service in California. So we help our local clients purchase and sell here in the state. We also help our investors to purchase and sell property across 16 markets in the nation. So we have a solid team of everyone who will help you from start to finish in those 16 markets. We're also a property manager and a private money lender. So what does that mean for our clients? It means that we're really a one-stop shop for our folks that don't have the time to go out and research and vet everybody on their own, but want a team of reputable, professional individuals to assist them with their real estate sales. So we help you from start to finish and through the life of your investment through property management as well. And I mentioned our 16 markets. I want to show you guys on a map where those are. So all the way down to Southwest Florida and everywhere in between. So anywhere that you have an interest, we probably have a team. We vet our regions very thoroughly, and we want to make sure that we present the best team and the best numbers to our clients. So again, 16 markets in 8 states across the US, and our insurance specialists are going to be able to write those policies across the nation as well. So like I mentioned, an entire team in each area. So let's do a quick poll question. We want to get an idea for who's listening tonight and make sure that we're really covering everything that everybody needs and that everyone wants to hear. So I also want to make sure you're paying attention. I'm going to go ahead and launch the poll question. So the first one, how many rental properties do you currently own? None yet, 1 to 2, 3 to 4, or 5 or more. I will give everybody a couple seconds to reply. This is, again, just for us to get to know our audience. get to know how everybody needs assistance as you're watching tonight. And I promise we won't post the results up on a billboard on the 405 freeway. I'm pretending you guys are all laughing. All right, looks like we've got most of our replies in here. So let's go ahead and share our results. So 33% of our attendees don't own a property yet. I'm excited that you guys are all here for some information. Insurance is a really important aspect of your investment portfolio. So good job, overachievers. We've got about half with 1 to 2 properties, no one with 3 to 4, very interesting. And about 20% of our attendees have 5 or more. So thank you guys so much for participating. Now that we know what we're looking at, let's get right into the main event. Like I said, main event here, guys. We work with Huggins Dreckman Insurance. That's Michael McAllister and Stan Dreckman. Marshall Reddick has been working with them for many, many years. Don't want to date you, Stan. If you want to share that info, you're more than welcome. But anyways, guys, like I mentioned, Stan and Michael write policies for almost all of our clients. They cover across the nation, almost every single market where we invest in property. And they offer really competitive, really comprehensive policies. And I know as investors, we're definitely looking for the best rates and the best deals, but when it comes to insurance, it really needs to be about the best coverage as well, and the coverage you get for what you're paying. So without further ado, I would like to hand it over to Stan Dreckman and Michael McAllister.
Well, hi. This is Stan Dreckman. Whoa, there we go. Can you hear me?
Yes, loud and clear.
Kristen. Oh, actually, I was talking to you, Kristen. I realized that they're cut off. Thank you, Michael. Anyway, so yeah, I'm Stan Dreckman. I was the old guy you saw up there, so it's okay, Kristen, you dated me a bit, but I think my picture did it anyway. So we've been around a really, really, really long time. We understand real estate and insurance. My background is insurance 100%. Michael, who you also saw there, has 20 plus years in the property management. So between the two of us, we really have a good concept of what is a good rental property and how to make it impact on the insurance. So we're going to start off by just discussing quickly. Oh, and by the way, 70% of you are veteran investors. I do think that we'll bring you some things you haven't seen before. I certainly hope so. And for those of you who are new, you're definitely going to get a quick education here. Purpose of insurance is just what it says right there in front of you. You've got a chance to look at that. It's to keep you and your loved ones safe from a financial loss. The idea is that if you have a serious claim, water damage or fire or windstorm event to your property, we're going to put you back together again. That is the whole idea of insurance, is to put you back in play and to keep you covered, keep that rental income coming in for you. So, whoops, excuse me, I moved a little quickly there. The kinds of claims that are covered. When you're looking at rental properties, we cover a lot more than what you see here, but what you see here is the most common kind of a claim that is going to occur to a rental property. Fire, obviously, is your #1 claim. Wind and hail. We've seen a lot of wind lately with hurricanes and things like that. That's wind coverage. Vandalism happens occasionally. Actually more so than fire, the most common kind of a claim is going to be a water damage from broken pipes and appliances. Those little spigots that go behind the refrigerator and get cold water for your tenant, those leak and those can cause damage to your flooring, and that's what that coverage is for. There we go. I went way too fast. There we go. I'm getting the gist of this thing. By the time we're done, I'll have this down pat. Landlord policy consists of two sides. The property insurance that we just briefly mentioned to you, and we're going to show you a really good layout on the property policy so you get a really good idea of what it's like. But the other half of the policy is liability. Someone gets injured on your property. We talk about this. Some of you have heard us talk about this before, but it's an amazing claim. Someone who's a concert violinist was walking out on the sidewalk out to pick the paper and walked across some mud flow that had come from a broken pipe, and she slipped and landed on her left shoulder. Well, she cannot be a concert violinist for quite a while. That is a liability claim to your property. What's also a liability claim to your property could be if your property creates property damage to some other property, like the sprinklers going all night and the neighbor downstream down the street from you gets inundated with water and you cover up their kitchen floor and they'll wake up in the morning. The point is that you have two kinds of coverage in these policies. One is for property damage to your property and then damage to other people or to other people's property. When you buy insurance, when you buy insurance, man, this is moving. I do apologize. I'm having a technical issue here. When you buy insurance, this is basically what a landlord policy is going to look like. This policy that I'm going to profile here is on a property that we wrote the insurance for just a couple of weeks ago. This is a real property in Oak Grove, Kentucky. We put $140,000 of coverage on the property. You have some rent-ready contents, rental income. That's the protection that covers your rent in the event you have damage to your property and the tenant moves out. You'll still have income coming into you even though the tenant is gone. Because when the tenant leaves following a bad fire, they're not going to keep paying you and the Marriott Residence Inn. They're going to be staying at the Residence Inn until this place is put back together again. Then you have your liability protection and then your deductible. And this property we chose was a $1,500 deductible. Many times we'll go higher depending upon the investor's capabilities. But for this size of a property, the $1,500 deductible was pretty good. The policy, though, that I showed you really isn't complete. You need to add some items to the policy to really make it be what you want it to be and to perform the way you want it to perform. With our Safeco product, and we are independent agents, by the way, we sell for a lot of companies, but we use Safeco for this particular program because they're the best contract on the street. Safeco offers some coverages that you're not going to get everywhere else. You're going to get elements of this from other places, but you're seldom going to get all three of these from other places. The Safeco policy offers a pure replacement cost policy, basically new for old. So if you have a fire or if you have a bad water claim, we're going to replace it and not depreciate a claim. The really inexpensive policies out there will depreciate a claim, so you have to be careful about that. You need to make sure you're getting a replacement cost. But replacement cost is much, much more than just new for old. You have a potential, and this is where you get into our extra coverage provision. You may have a potential on a total loss scenario. So you have a fire and it's basically gutted and you got to knock it down. It is entirely possible that it would cost more than $140,000 of insurance that we set as a limit on the policy. So we provide you a hedge, basically. We will actually pay up to 125% of that $140,000 that you saw there on that example to pay a total loss. So 125% of that policy is an additional $35,000 that's available. You really have on a $140,000 policy, $175,000 available to replace the property. So we feel pretty good about that. But there's one more aspect of replacement cost that is hugely important. You may recall that when we profiled that property, we said it was built in 1997. I guarantee you that since 1997, there's been 10 to 20 code changes in Oak Grove, even in Sleepy Oak Grove. There's been some code changes, and the property is going to have to be rebuilt to the new codes. Most of your landlord policies do not pick up code change coverage. We will also pick up the cost of repairing your property, including the cost of code changes. And this is what a policy should look like if you have all of the features installed. This is the same property that we showed you 2 slides ago. This is with everything there. We have the replacement cost. We have the extended replacement cost, an additional $35,000 of coverage. We're picking up some rent-ready coverage here. Rent-ready contents coverage here, your loss of income. Again, when you have a bad fire, the tenants are going to move out. Liability protection, medical payments. And medical payments, that coverage is one that's provided just to keep peace. If someone twists their ankle on your property, we might just pay that and call it a day. If someone is seriously injured on the property, that goes under your $500,000 of coverage because there's going to be a lawsuit. We have the ordinance of law coverage here. That's your code change coverage. It's all there, including a brand new coverage that's not normally available also under landlord policies, and that's called water backup. That's water that backs up from the sewers and drains and comes out. There's something wrong with the city lines and it backs up and it comes up and damages your property. We'll cover that too. With that $1,500 deductible, you have $654 annual premium. That's a heck of a deal. And if we insure, this is a shameless plug, if we also insure your home in Safeco, we'll knock another 5% off of the cost of the insurance. So it's kind of a neat deal. Now, we're going to show you in an actual claim example why those extra coverages are important. We kind of tried to paint a word picture for you. Here it is in blue and white. You have a situation, if you look at that center column, we have total loss on that policy that we profiled of $140,000. There was a fire overnight. That place is gutted. They're knocking it down. They're building a new one. Most of your policies, the usual landlord insurance company is going to pay the policy limit. Remember, Safeco is going to pay 125% of that limit. So you have a total loss. The company, usual landlord insurance company, is going to pay $140,000. The actual cost to rebuild it, though, is $152,000 because really, while we go through a very extensive replacement cost estimator in our system, we never really know until the property burns how much it's going to cost. We are very, very, very close. We're going to be exceedingly close, but no one's perfect. So we build in that hedge. So in this case, the actual cost to rebuild is $152,000. We're going to pay that $152,000. Why? Because we have the 125% replacement cost. Plus, there's an additional cost of around $8,000 on this building to pick up the building code upgrades. And so, yes, we'll pick those up as well. So you have 2 policies here. Both have a policy limit of $140,600, but the Safeco policy pays $160,000. The other policy stops at its limit that's posted. So you have a very superior contract in Safeco, and anytime you're looking at a policy, you want to make sure it has all those features built in. Otherwise, you have the potential of really getting hurt in the event of a claim. Let's talk about a couple exclusions. And these are things that have been in the news lately: earthquakes in Mexico and floods all over the U.S. Earthquake is always excluded. Most of us here on this phone call live in California, and we know this. Flood is also excluded. It's not a part of the regular policy. That is a separate policy. There are a lot of ways you can buy those policies to cover the flood exposure. You can buy one on a FEMA-based program that's called the National Flood Insurance Program, or in some states, it's just a growing program. It's not complete. But in many states, such as Texas and sometimes in California, we're able to sell what's called a private placement policy that's usually about 2/3 the cost of the National Flood Program, making it a very affordable policy to buy. But remember, all those people sitting in Houston in water, that's a flood. And they are not covered unless they bought flood policies. 80% of the people did not buy flood policies, by the way. Wear and tear is not covered. So if they used to have wear and tear, they used to have new carpet, got to repaint the house, got to, fix the walls, where the people had pictures hanging on the walls, things like that. You're going to pay for that yourself. Freezing of your pipes while vacant. That's only going to affect you in the super cold climates. It doesn't happen very often in most areas that the Reddick network is in, except for possibly the Clarksville area. Occasionally it'll happen in the Indianapolis area. You're going to have a situation where if the property is vacant and the pipes freeze, you do not have coverage if the pipes burst as a result of freezing. However, that's a completely controllable event. If you have the professional property management that's recommended by the Marshall Reddick group and their realtors representing the areas, they know that they need to climatize the property. In other words, they're going to turn off the water and drain the pipes. Thus, they will not burst. It's very simple. Totally controllable event. I'm going to go on to the next one. Here's some things that this is an interesting one. This is a big deal in the high deserts in California. Illegally growing plants and I think we know what those are. And then keeping the exotic animals. If your tenant changes your house entirely as a result of his marijuana cultivation inside the home and causes damage to the property, there's no coverage for that. That again is a property management issue. They'll handle that. Same with the illegal manufacture and processing of chemicals. I think we all know what that is. That's a meth lab. That's not covered as well. None of your companies are going to cover this exposure for you. Again, property managers going by, checking out the properties are going to handle that. The backup of some sewers and drains, unless we endorse that coverage out of the policy, which we can do for you, that is not covered. Pollution and mold are not covered items either. And these are all standard exclusions in any policy, not just ours. Liability policies also have. The liability side has some exclusions as well. We don't cover intentional bodily injury, nor do we cover non-bodily injury or property damage. A non-bodily injury claim or a property damage claim into liability to your own property is where you're covering it through fire. Your own fire policy covers this exposure right here. So that's really what all we're saying there is under the liability side, we're not covering everything. You have your property and your liability side, and never the twain shall meet. Something to be aware of, it's really, really, really important. Some of your landlord policies completely exclude animal liability. So if your tenant has a dog and the dog bites somebody and somehow you are brought into the claim, and it can happen, even though it's not your dog, while it's not common, it's not unusual for the landlord to be brought in on a claim like that. The vast majority of your property and liability policies for landlords have some kind of a limitation on the policy for animals. So you want to make sure what that is. And again, some policies will completely exclude animal liability. There's always a reason why a policy's premium is too good to be true, and sometimes this is a reason why it's too good to be true. There's things like pollution and mold. Again, we don't cover that under the liability. The acts of civil authorities, that the civil authorities say that the people have to vacate the home and they're upset about it and bring a claim against you, you turn them over to the city because the city made them do it. We're not going to cover daycare operations of your tenants. If you have a tenant who has a daycare operation, first off, don't let them do it. It's a huge mistake. But if you do, make sure they provide you with evidence of liability insurance. They can get that. It's not expensive, and that protects you and it protects them. If the association brings a loss assessment to you for a liability claim for which they did not have enough insurance, if the property you're purchasing is in an association, you want to make sure that you have a coverage called loss assessment coverage. And with that loss assessment coverage, you're covered in the event the association brings an assessment against you for uninsured losses due to insufficient limits of coverage that they are carrying. If they bring your portion of that to you, maybe they're going to send you a bill for $5,000 for your portion of the coverage. You can have coverage for that. We can actually cover you up to $50,000 for that. It's a nice coverage to have. But if you have a property that's not in an association, then it's a completely unnecessary coverage. And then we also cover claims due to auto and watercraft and damage to your tenant's property and injuries to any of your employees, or to your real estate. That gets back to non-property damage claims we exclude, because you can buy auto coverage, you can buy watercraft coverage, your tenants can buy their own coverage for their own property. If you have employees, you have workers' compensation, but if you have a property management company, they're handling that. You don't have to worry about that. And then again, for your real estate or personal property, that's why we have the fire and other insurance as well. So you're totally covered for those issues. The liability policy is pretty broad. You'll find it's going to handle you in most situations. Here's something I also wanted to bring to you. It's an interesting coverage comparison. I'm just going to go through this very, very quickly. But a lot of times you're going to see policies offered to you that are on commercial property forms. We don't recommend you take those for any number of reasons, and we're going to show you a few right here. One reason is that many of those policies are going to, they will give you a replacement cost, but you have to be at least 80% insured to replacement cost. That means if you aren't fully covered to at least 80% of the cost to replace the property at the time of the claim, if you're not there, the insurance company can penalize your claim. They can deduct a factor based upon your being underneath that 80% level. Under the Safeco policy, we don't have that clause, so you don't even have to be concerned about that. Under your commercial policies, they do not have the extra replacement cost, the extended replacement cost that we will provide. We will pay up to 125%, as you mentioned earlier. Generally speaking, they are not going to do this. And under the building code coverage, in this particular policy form, from the Hartford on their commercial form, they will give you up to a maximum of $10,000 of coverage at most. It's 5% or $10,000, whichever is less in this particular policy. We will give you up to 10% of the building coverage. So as you saw in that example, we had up to $14,000 of coverage available under that particular policy for building code upgrade protection. That's very, very important coverage to have, and you don't want to short shift yourself here through certain types of policies. Rental incomes, generally speaking, is not a part of the commercial policy unless you add it specifically, whereas we'll give it to you automatically. Theft is usually not covered under your commercial policy forms for property. We'll cover theft for heating and air conditioning systems every once in a while. Your property may become victim to the midnight supply company that will leave in the middle of the night with your air conditioner. So when your tenant wakes up in the morning and they turn on the air and nothing happens because it was taken. So we will cover that exposure for you. And roof damage, many cases, in particular with commercial policy forms, but we're starting to see it more and more with other forms. After 15 years, some companies will apply an actual cash value deduction against your roof. If you have a roof that's got a 20-year life and it's 18 years old under this Hartford policy, they're going to give you about 10% of that policy, of the cost of replacing that roof back as a claim settlement. In other words, they're going to be heavily depreciated on the claim, whereas under our Safeco policy, it's new for old. If you have to pay $10,000 to replace the roof following a fire or a wind event, we'll pay the $8,000 to $10,000, whatever it takes. And again, this is an example of dog bites not covered on that policy, whereas we can cover it under our policy with the exposure simply being underwritten. We want to know what kind of dog you have. That's all we want to know. So the last item is an interesting thing. We have under the Hartford policy, the commercial forms, they have what we call aggregate limits of coverage. The aggregate limits mean after that limit is reached during a policy year, your liability insurance is pretty much expired. There's no more limit available. That isn't the case under the Safeco policy. Every time that there is an occurrence, we have a full limit of coverage under our policy plus the cost of defense. So all in all, that Safeco policy is a far superior coverage form. Michael right now is going to come in and take over, and he's going to talk to you about some really crucial insider tips for insurance. Here you go, Michael.
Good evening, everybody. I won the coin toss, obviously. I get the landlord tips for the insurance, which is my favorite part. Stan went over the basics of a policy, what you need to protect your assets. These are tips that will get you further down the road and better help protect your assets. Okay, there's a lot of special coverages that are limited. Vacancy is a huge one. I can't tell you how many times I've talked with people that don't understand when your property is vacant, some of your coverages start to drop off. After 60 consecutive days, you're not going to have the majority of your coverage for vandalism, theft, and yes, fire damage is not covered. So if your property is vacant, you need to contact your insurance agent and let them know. There are separate policies that we can write for a vacant property. It is a little more expensive, but it will give you the protection on your asset that you really need. And then once you get a tenant back in, we can get your old policy back into place. So you have to be really careful when you have vacancies on your properties to keep your insurance agent informed. Okay. Frozen pipes, which can happen in several places, usually not in Los Angeles, but where you're buying some of these properties, the frozen pipes will not be covered from the first day of the vacancy. That's why you want to have a great property manager that will keep an eye on your property, especially during times of vacancies, and do some of the things Stan said earlier about, waterproofing your property so that you're properly covered. Okay. Same with vacancies. Okay. Stay in touch with your agent. Stay in touch with your property manager. They are your best friends. Okay. Actual cash value will kill your property if you do not insure properly. And actual cash value is basically, as you're seeing here, your claim is for $100,000, but once the depreciation is applied to your policy, you're only going to get $70,000 on that claim, where the replacement cost will give you the full $100,000. Now, a lot of people don't realize that $30,000 is being made up coming out of your pocket. Once you take $30,000 out of your pocket to cover this policy, when you did the actual cash value that you shouldn't have done, you're never going to cash flow again on your rental property.
And it's important to know that the policies that we provide are not ACV policies. They are pure replacement cost.
And yes, every policy we write with Safeco will be replacement cost. That's the best way to protect your asset. Okay, deductibles are important things. They really affect what your premium will be. A 1 to 2 unit family, $2,500. Now, we saw an example earlier where we used a $1,500 deductible. That's what that particular insured wanted to go with. Would it have reduced the premium if we'd have went with $2,500? Yes, it would have. So there are things to look at, and we look at all that when we're looking at your property and how to properly insure you. A 3 to 4 unit, you want to increase that a little bit, up to $5,000. And your wind hail deductibles, typically at 2%, will give you the best rate on your premium. Okay, higher rates obviously are going to be in the coastal areas where you have hurricanes or floods, tornado areas, okay? Obviously Houston, some of the Florida areas. Those are going to be the more expensive places to get insurance. Now, some of these areas where it's lower, you're going to notice there are areas that Marshall Reddick looks at for your investment properties. They understand the marketplace and that these areas will give you a little bit better policy. The Memphis, the Austin, Indianapolis, a lot of the areas where they guide you to, they have looked at all of this and looked at the rates of insurance policies as well. Okay, what you buy affects your premium. That is a huge thing, and I try to explain this to people all the time. The newer the property, obviously, the lower the insurance. Also, the roof. The age of your roof is very important, okay? 15 years is a ballpark number, but the newer the roof, the better your premium is going to be, okay? Square footage, you don't want to get too large of a place, and you definitely do not want to have a pool. A lot of people look at their properties, they go, oh, it's so beautiful and it has a pool. That's a liability issue. Somebody could drown, neighbor could hop the fence to swim in it and injure himself, and that's a liability claim against you, okay? And then at the bottom, you'll see that no claim history or clue report. Any state other than California, they run the clue report, and you don't want to have a lot of claims on your property. So there are things to think about when you're looking at these properties. And obviously, Marshall Reddick looks at this when they're looking at the properties as well. Okay, construction costs. They obviously go up each year. In 2016, they really went up. That means that it costs more to rebuild your property. So as we're looking at the value to put to rebuild your property, it will go up from time to time, which will cause your premium to slightly go up. But we look at giving you the exact number that we feel it needs, plus your 25% extra so that you won't run into that issue. Okay, and if you're getting insurance anywhere else, when you get it with us and Safeco, you will get a replacement cost assessment. Breaks down the entire property, tells you what we feel it costs to replace it, and then you'll get an additional 25% on top of that. If you're working with any other agent, make sure they give you this. That way you know they're not underinsuring your property, and when you have a loss, you will not catch up to your asset ever again. Okay, your insurance score, except for in California, we just talked about that a little bit. Your credit does count. Also, credit history counts. Claim history counts as well. My favorite one on here is pay in full. You get a discount when you pay your insurance policy in full. There's no reason you don't have your mortgage company do this for you. When your mortgage company pays your insurance bill, they're going to pay it in full and you will get the discount, and then you'll pay your mortgage company monthly. So you're already saving right off the bat by doing that, okay? And packaging, you always hear it on the TV, but it's true with any company. Package, put your home and landlord policies together, get that extra 5%. Put your auto in there, get an additional credit. Package all of your insurance with one company and you will save an incredible amount of money, okay? Also, the number of units. A lot of insurers will not insure your 6th unit. Most of them won't do 5. With the Safe program, we can do more than 6. So if you're going to have 7, 8 rental properties, 10, give us a call. We can absolutely do it. We can actually go up to about 20 right now. We have a special deal with Safeco most agents don't have, where we can go up to 20 different landlord policies for one person. Okay, dogs. Dogs are a huge issue when it comes to rental properties. When I used to do property management, it was one of my biggest things on my board, dogs. When you rent to a renter that has a dog, you really want them to have a renter's policy. That way they have liability coverage that will cover their dog when it bites somebody, okay? You also maybe want to just avoid renting to people with dogs, but check which dog it is. The breed of dog does matter. And you can contact us. We have a list of dogs that Safeco does not prefer to work with. And a lot of insurance companies will absolutely exclude animals altogether. They'll say if there's a dog in there, we will not pay a claim. So it's something to really look carefully at when you're looking at your policies. There are some special companies that if they have these breeds, you can get a special policy, but you're better off trying to avoid that, okay? Tenants having renter's insurance, that covers your asset. It makes them take better care of the place, and it also covers their personal property. Your landlord policy does not cover any of their personal property. So if you have all your tenants get a renter's policy, covers for the liability of a dog or other issues, also covers their personal property if there's a fire or any kind of damage in there, okay? And if a tenant's evicted and vandalizes the home, a lot of policies do not cover that. Our Safeco policy in general will cover that. So it's something to keep in mind when you're talking to insurance agents out there. These are tips that you should be writing down, and you can get these slides at the end of the day from Kristen, but you want to ask your agent these questions, and we look at all of this. Okay, loss of rental income. This is a huge one, okay? When you're getting your property, you're looking at what you're renting it out for. That's how you know what your cash flow is going to be, okay? If you don't have loss of use and you have a fire at your property, your tenant moves out, goes to Residence Inn, pays them, and you get no money in, so you can't cover your mortgage. Want to make sure you always have loss of rental income on your policy. Not only that, you want to make sure it's going to cover your rent for at least a year, because it's going to take some time to rebuild that home after a fire. So it's something to take a look at. We always look at what your rent is on your new property, and we multiply it out by 12. Sometimes we'll even give you a little extra depending on the area. So it's something to really keep in mind when you're getting a landlord policy, okay? Stan touched on this earlier. When is $1 million less than $500,000? When you're with a company and they have a $500,000 coverage for each occurrence, but it maxes out at $1 million for the annual aggregate, that's where they're going to stop. If you happen to have 3 claims and each one was $500,000 per claim, one company is going to give you $1 million and the other $500,000 you're stuck with. Each occurrence on a Safeco policy will pay the $500,000. Okay, Super important. Put a little asterisk down on your notepad. Very important to keep your insurance broker up to date on everything that comes into play when you change things, your address for us mailing you things, and obviously your lender. When you change your lender, let's say you go from B of A to AmeriFirst, we need to know that, because when your policy comes up for renewal and they send out the renewal notice, if they send it to the wrong lender, your policy doesn't get paid and no payment, policy cancels. You might not know for a month or two that you don't have insurance in place. If you contact your insurance agent, us, and tell us that you have a new lender, we will change it on all your policies and your bill will get paid properly by your lender, okay? Also, it's always good to let us know when you move, so when we're mailing things out, renewal notices or updates on your policy, we know where you're at, okay? When you decide what property you want, it's really important to contact your agent, because we're going to go through it very carefully with you, let you know certain things that we can help you with. But one of them is when you let us know. If I'm quoting your property for a policy that's coming in 2 weeks, I can get a better discount for you than if I'm quoting a property you're going to need the insurance for tomorrow. The insurance companies like to know that you're looking ahead. It tells them that you're a responsible person, and they give a discount for that. So the soonest that you know you're going to be, this is the property you want, call us and get a quote. If it falls through, that's fine. At least we have the quote and we have your price locked in. If you wait until you're right about to close and you call me, your price is going to be higher. And one of those problems is at renewal, every year you've already paid the higher amount, so every year it's higher. If you'd have called me 3 weeks ahead of time, you'd have a lower premium moving forward. Okay, natural catastrophes and what's the right coverage. Obviously, earthquake policies are separate from your landlord policy. You would need a separate earthquake policy. And earthquake is not when the ground settles. That's not an earthquake. An earthquake is when an actual earthquake happens, and you need that policy. Same with the landslide policy. They're for landslides. We've had a few here in California that we all know about. You must have that coverage for your policy to be in effect and get the proper coverage. Same with hurricane damage. We just had the hurricane rolled through. A lot of times your landlord policy will cover certain things, but you need to talk to your agent and make sure you're properly covered, okay? Tornado damage is usually covered under your landlord policy. Flood policies will cover damage from a flood, okay? And that's the exterior water when the surface water comes in as well. These are things that when you talk to us, we will give you your landlord policy, and we'll follow up with a flood policy, letting you know where you sit if you're in a flood zone, how much it is to get a flood policy, and why you should get it. And we'll walk through it with you step by step, okay? But you have to understand, earthquake, flood, those are all separate policies from your landlord policy. Okay, pricing, use the deductibles. I see this a lot from Marshall Reddick people that are buying their investment properties. They keep their deductibles straight across the board. Makes it easy on you. It also gives you the best pricing, okay? Make sure you understand your insurance. You should be reviewing your insurance with your insurance agent all the time. I have people call me all the time and they'll say, okay, here's where I'm at. Do you think I'm properly covered? And once again, package your policies. Put your auto, put your home, put your dwelling fire all with one company and get those discounts. Super important. Okay, we have another poll that's coming up.
All right, thank you, Michael. Let's go ahead and launch into our second poll, y'all. I hope you're all still paying attention. Lots of good stuff here tonight, guys. And let's go ahead and get our second poll question launched here. All right, poll number 2. How well do you feel your assets are insured? After hearing from Stan and Michael on different types of policies, what the additions are, what's excluded, replacement costs, everything that they've mentioned. Think about it and let us know how well you think you are insured currently. We've got we'll wait a few more seconds to see if we can get a few more people to chime in here. Here are our choices. Do you feel you're underinsured, adequately insured, overinsured, or don't really know? In any regard, we can definitely talk about your current coverage and what we might be able to do to help you out and see if it can be better. All right, let's go ahead and close this out and see what our results are. And we'll share with our friends. So let's see, 28% of us think we're underinsured. So those 28%, we need to get you guys on the phone with Stan and Michael so you guys can talk about what you can do to feel like you're more comfortable with your coverage. A little over half of us think we're adequately insured. No one believes to be overinsured. I'm not sure if that's a good thing or a bad thing. And 17% are not sure. So like I said, and anyone there who thinks you're underinsured or don't know, definitely worth a conversation. I'm also happy to review policies. Like Michael said, you want to definitely review with your insurance agent, but as an advisor here at Marshall Reddick, part of my job is also to help you guys review your insurance policies and make sure that you're comfortable with the coverage you select. So let's go ahead and hop right back out of that, and I'll send it back to you guys. Let's power through the end of this. We've got a few more minutes, and if we have time at the end, we'll take some questions. You guys good?
I think so. It's not moving yet.
All right. You guys should be back on now.
There we go.
Okay.
All right. Moving right along on how to be properly covered and make sure your assets are protected. One of my favorite is the umbrella policy, and everybody should have an umbrella policy. And it's basically what it sounds like when you open an umbrella that covers you. An umbrella policy covers all of your assets. It'll cover your home, your auto, your landlord policies, and it's very important to have. You should always have $1 million in umbrella coverage, and they go up from there depending on what your assets are. And I even talk to people that are young about getting an umbrella policy. I had a couple not too long ago in their early 20s. They were hemming and hawing about getting an umbrella policy. They got one. Thankfully, they happened to get into an auto accident that they were at fault for, and it came out to around $700,000. If they wouldn't have had the umbrella, they'd have been on the hook for all the extra money, above $500,000 that they had for their auto coverage. Okay, the umbrella kicked in and took care of them. If they did not have that umbrella policy, they would have had their wages attached, which can be up to 40% of your wages in the state of California. So they had nothing, they were covered. You all have a lot of assets that you need to cover. Make sure you have an umbrella policy, okay? And make sure that the umbrella policy is a real umbrella policy. A lot of people sell umbrella policies that just cover the very basics, okay? We use a Safeco umbrella that's a true umbrella. It will even follow you when you go overseas for your auto. So something you can give us a call about anytime, and we'll talk to you about an umbrella policy, okay? And once again, the best way to do this, make sure you have your homeowners, your second home, your auto, your landlord, all bundled together underneath your umbrella, and you'll get the huge discounts, okay? We work with Safeco. We have a direct line for our Marshall Reddick people that goes into Safeco. They're a 24-hour, 7-day-a-week service. Of course, obviously, we also have a brick-and-mortar company that we are at in Los Alamitos, and our email addresses are right below our wonderful faces there, along with the phone numbers and our extensions. And you can always get that from Kristen or give us a call at any time, and we will take care of you. And when you stop by, be sure to stop by and say hello to Ruby. Ruby is our little mascot. She is great, loves belly rubs and dog treats. So that's pretty much the insurance overview of how to protect your asset. We can take questions. Also, please feel free to call us at any time. Tell us you're part of the Marshall Reddick, and we will absolutely hop in and take care of any of your needs.
Thank you, guys. Thank you, Michael. Thank you, Stan. All right, guys. So there you go. There you have it, the A through Z on insurance coverage. we want you guys to make sure that you feel comfortable with the policies that you have in place, and moving forward with new acquisitions into your real estate portfolio. We want to make sure that they fall under the same coverage umbrella, if you will. So let's go ahead and get through the rest of these slides, and then we'll go ahead and see if we have any audience questions that we can get to. Looks like we're going to have a few minutes left here at the end. So Marshall Reddick Real Estate is, really involved online. We have a really strong online presence, and you can find us on all of these websites that you see the logos for. You can also look us up on Zillow and read our reviews. Definitely as part of your due diligence, we want you to be able to research the team that you're going to work with. So you can definitely look us up. You can come to all of our events. They're all free. So we hope to see you guys in person, of course. As I mentioned in the beginning of the presentation, my role here is as a real estate advisor. So what we like to do is a consultation with all of our investors. And this is the role that Marshall Reddick plays in the grand scheme of things. So when you speak with an advisor, such as myself, we talk about your goals in real estate. Why are you looking to invest? What are you hoping it's going to accomplish for you? How? We talk about your financial options. Are you planning to pay cash? Is it a conventional finance? Are you going to look into private financing? We'll talk about what that looks like for you. What's your time frame? Would you like to close by the end of the year? Are you looking at the springtime? Everyone has their own timelines and their own expectations, so we want to make sure that we're meeting those. We want to set your criteria, talk about what you're looking for, your budget and price point. This is how we help you determine a market and select a property within that market. And finally, introducing you to all the key players. That's your realtor in the area, your property management, your lender, and importantly, your insurance agents. I think it was mentioned in the presentation, if you are going to finance a property, you will not be able to do so unless you have insurance for the policy. So not only is it important to protect yourself, but your lender will not lend you funds unless you're insured. So if you'd like to have a consultation with me, here's my information. You can reach out directly via telephone or email. My information is down there below. You can also go through the Marshall Reddick, sorry, I try to put those words together, the Marshall Reddick website and find the consultation link, and we'll get you set up to hop on a call or meet in person in the office and get you started, see where you're at, what you'd like to do, and give you guys a couple more minutes here. I'll leave my information up here on the board, and we'll see what questions we have here. Give me just a second. It looks like we've got quite a bit of audience participation. So Stan and Michael, give me just a second to pull up some of these questions here. All right. Lenore asks, will all Safeco agents quote the same prices, or will they vary?
You know, all things being equal, excuse me, all things being equal, we should have the same pricing. However, not all Safeco agents can quote your properties. In many cases, even a Safeco agent in Tennessee is a good example. In the state of Tennessee, probably cannot offer you a quote because you don't live there. We have the ability to cross state lines within the Safeco network. They will allow us to go all through the United States, wherever we're licensed, and issue policies. We have no restrictions in that classification. And then, since the vast majority of you are living in California, your local Safeco agent can't write your homeowner's policy, most likely. We could write you a Safeco homeowner's policy here, write you a Safeco landlord policy in Tennessee, and you'll get your 5% discount on your landlord policy in Tennessee because we have the ability to write your Safeco homeowner's policy here. So Again, all things being equal, the rates are the rates are the rates, but we have the ability to cross lines, do things that safe agents can't do. We can write your home, discount it that way, and we are offering you 24/7 live customer service at no charge to you. We take a commission cut to offer that to you, so you are not paying for that. That is all free to you.
Thank you, Stan. Hopefully, Lenore, that answered your question thoroughly. If you have anything additional, please let us know, guys. We're going to answer questions for the next few minutes, and if we don't get to you, please know that we will follow up tomorrow and make sure that you get all of those questions answered. So this next one, gentleman, comes from Ruben, and Ruben asks, do you feel umbrella coverage provides adequate asset protection, or should other layers of asset protection be added, such as titling properties in a trust or using a separate LLC for each property, etc.?
Well, all of those are good risk management techniques and asset preservation techniques. You kind of want to do it on a stepping stone basis. Any good attorney will tell you you need to have your liability insurance and an umbrella in place before you start talking about LLCs. Doesn't necessarily apply to the trust, but certainly the LLC. And then you're going to be naming your LLC on your insurance policy, because even though you have an LLC, which protects your personal assets theoretically from being attacked by someone bringing a claim against you, you still need defense coverage. You still need someone to pay a claim. So you haven't really removed that exposure. What the LLC will do for you is, if there are uninsurable liability claims, and there are, then you have that protection in that way. Theoretically, they can't come after you. You still have to defend yourself, but theoretically, they cannot attach your assets. So it's not an either or. It's a combination move, basically.
Wonderful, thank you. Actually, right before you started answering that, I had another attendee ask about an LLC and insurance. So thank you so much for covering that. If you guys have additional questions about LLCs and trusts, etc., I'm definitely happy to review that with you as well. It's something that lots of our investors ask about, so we have a pretty good knowledge about incorporating and when it's a good idea and when you should start thinking about it. So next question, again, comes from Lenore. So Lenore, thank you for being a very active participant in tonight's presentation. Can you have more than 10 homes under an umbrella policy?
We can write a whole lot of homes under umbrella policy. In our Safeco program, we can take you up to 20 without asking permission. We can take you to 25 with permission. If you decide to go absolutely crazy and really invest and become a property mogul, and you have 40 or 50 properties, we'll get you an umbrella policy to cover that. It'll be outside of our Safeco program, but we can do that. So the answer to that is yes, you can.
Perfect. Thank you very much. Lenore, that's an excellent question. As many of you on the presentation know tonight, and for those of you who don't know, you can actually only conventionally finance up to 10 properties. So great question on that as far as the insurance coverage. All right, guys, so we are going to go ahead and wrap it up now. It's just about 7:30. We want to make sure that we get you guys off and back to your families and getting ready for the rest of your evening. So I want to thank everybody for joining us tonight. Thank you, Stan, and thank you, Michael, so much for a very thorough, informative presentation. We really appreciate you guys and are so happy you could join us tonight. Again, everyone, my info's up here on the screen now, and a few slides back, you saw Michael and Stan's information as well. And if you have questions that you have directly for Michael or Stan, you can always shoot me an email or give me a call, and I'm happy to connect you with them as well. So thank you all again for joining us, and I hope everyone has an excellent evening.